Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. Layoffs at TCS spark fear across Indian IT. Stocks decline across the board after TCS announces more than 12,000 job cuts in what is the biggest layoff in the software industry yet. TCS claims the job cuts are not linked to artificial intelligence and blames a mismatch in skills. US and Europe agree on a trade deal with days to go for the August deadline. US will impose a 15% tariff instead of the 30% proposed earlier. Auto tariffs reduced from 25% to 15%. Steel tariffs to continue at 50%. Business leaders in Europe criticize the deal. European Commission's president says this is the biggest deal they could get. India evaluates its options as the August deadline approaches with an interim trade deal almost ruled out. Sources say India is considering all options, including the possible imposition of reciprocal tariffs, hope to find consensus on a full agreement by fall. Sensex and Nifty near a two-month low after a sharp fall on Dalal Street. IT and bank stocks lead the decline. No respite for mid-caps and small caps as the sell-off continues. Shares of Kotak Mahindra Bank plunge after a disappointing Q1. ICICI Bank emerges as a top performer among private banks this quarter. HDFCBank is largely steady. Axis, Kotak and IndusInd Bank face some headwinds. Defence Minister Rajnath Singh says no important military asset was damaged during Operation Sindoor as Parliament kicks off a debate. Minister also says the operation was stopped after objectives were achieved and not under any external pressure. The union government is likely to launch the revamped central KYC registry from March 2026 instead of 2025. Government officials say that each KYC record covering individuals and entities will be assigned a confidence score based on the strength, validity, usage and revalidation of identity documents. Finance Minister Nirmala Sitharaman questions India's private sector over the lack of capital expansion, asks why is the industry sitting on passive funds instead of investing in growth. Supreme Court refuses to stop the publication of the Election Commission's draft voter list for Bihar on the 1st of August, nudges the EC once again to accept Aadhaar and voter ID cards to verify voters as many fear lakhs of voters could be disenfranchised. Maharashtra government culls more than 26 lakh beneficiaries from the monthly stipend scheme for women. This after 17 lakh beneficiaries were removed in April. The state government had credited the LadkiBahin Scheme as a key reason for its return to power. More people starve to death in Gaza, even as Israel allows a temporary pause in military action to allow food assistance. The overall death toll in Gaza nears 60,000 in the 21 months of the war with Israel. Elon Musk confirms Tesla has signed a $16.5 billion chip contract with Samsung. The South Korean giant mentions July 26th as the effective start date of the contract in its filing, but does not mention the name of the counterparty. The contract is effective till December 2033. The big story we are tracking this evening. Tata Consultancy Services has said it will fire 2% of its total workforce, equating to roughly 12,000 employees over the course of the current financial year. This is Indian IT's biggest layoff exercise till date. The company had laid off more than 3,000 employees, equating to 1% of its total employee count in FY 15. Shares of the firm tanked in trade in response to this development. Reema Tendulkar is here with all the details. Reema.
Thanks so much for that. So the big question is, do the job cuts at TCS signal a big tech reset? Well, the news is that India's largest IT services firm, TCS, is letting go of 2% of its workforce. That is nearly 12,000 employees. And this is largely the mid to senior level, and it would be spread across FY26. Now, this is significant because TCS is the bellwether of India's $250 billion IT industry. Job losses at this scale are not just rare for TCS, they're unprecedented. So what is the key driver behind the job cuts? Well, it is a growing mismatch between demand and the available skills. TCS insists this is not about AI replacing jobs or the need to hire less. CEO K. Krithivasan told Money Control that this is not about AI giving you 20% more productivity gains. It is about skill mismatches and the feasibility of deployment. But that said, there has been a slowdown. There has been pressure on margins. And in an AI automation world, we need fewer people. Fewer managers will be needed. The mantra is basically you can do more with less. Now, global tech giants have already made very deep workforce cuts, and this has been happening for a while. Just this year, Microsoft has axed nearly 15,000 jobs in 2 rounds. IBM has reportedly let go of 8,000 employees as AI has replaced HR. But now what's happening is that the tech layoff wave is hitting closer home. TCS calls it as a part of a journey to become a future-ready organization. But the deeper shift is clear, that the traditional, people-led, a linear revenue model is now giving way to an outcome-based AI one, a platform one. And it hasn't happened overnight. Indian IT companies have been stealthily, quietly rebalancing their headcount for nearly 2 years. This is the picture over the last 2 years and how the headcount has changed. For TCS, it's lower by more than 2,000. For Infi, about 12,500. Wipro, in excess of 25,000. So the question is, what lies ahead? Will other IT companies also follow suit and optimize their workforce to become future ready? So do we have more job cuts coming for the entire sector? Will the industry continue to delay wage hikes? Remember, TCS hasn't given their wage hike as they normally do in April. And in the near term, say for a company like TCS, will this trigger a spike in attrition or will it in any way impact the job delivery? So lots of questions. We'll have to see how this plays out. But this could just be the start of a deeper transformation in the Indian IT, the way it operates and survives in this age of AI.
Right. Thank you, Rima, for that. The employee strength of IT majors have also remained largely stagnant in every fiscal since FY23. In fact, TCS and Wipro have seen a reduction in headcount while employee strength has improved for Infosys. This as companies reduced hiring after stocking up on talent during COVID. Furthermore, growth has largely moderated after a pandemic-fueled surge, with constant currency revenue growth even falling quarter on quarter in the case TCS and Wipro in the first quarter of the fiscal. Now, software service providers are also facing more competition, with multinational companies establishing their own global capability centers for GCCs.
The focus on the Sholay dialogue, kitne aadmi the, or headcount based judging the IT industry, I think, thank God that period will be over.
So I tend to agree with the TCS narrative that this is a future-oriented restructuring, because in the days of generative AI, when you're using ChatGPT a little bit and helping yourself, that was fine. But this is the day of autonomous agentic AI, which means that 80% of the work could potentially be performed autonomously. So in that context, when you look at your organization top to middle to bottom, then you do a fundamental rethink. And I think every industry, it does not just IT, but definitely including IT, will do this reorientation. There will be some shedding of jobs.
Seems that it is not AI related, and that is how I would interpret it as well. Because had it been AI related, you would have seen more jobs being cut at the lower end of the org structure. So it probably is just a bit of being more efficient and optimizing the organization.
The big global story we are tracking. The United States and the European Union have reached a trade deal after 4 months of negotiations. President Donald Trump, flanked by European Commission President Ursula von der Leyen, announced the deal at his golf course resort in Scotland's Turnberry. US President Donald Trump has said that the country would impose a baseline tariff of 15% on most European goods, including cars. Further, EU has agreed to buy energy products worth $750 billion from the US and invest additional $600 billion in the country. However, US is expected to keep 50% tariff rate on steel and aluminium. However, Europe remains divided over its response to the deal. While German Chancellor and Italian Prime Minister welcomed the trade deal, French President hinted that it was a dark day for the Union. German exporters remain wary over the deal as well. They feel it could have negative repercussions. European Commission's president says this is the best deal they could get.
We have good news. We've reached a deal. It's a good deal for everybody, I believe. And I think you were saying this is probably the biggest deal ever reached in any capacity, trade or beyond trade.
It is.
It's a giant deal with lots of countries, because, as you know, Ursula represents a lot of countries, not one country. It's not easy for you. It's because a lot of very different countries, great countries, but some are strong with cars, some are strong with agriculture, some are strong with both, right?
15% is not to be underestimated, but it is the best we could get. It's overall across the board. Important was for us, it includes not only the cars, so go down with the tariffs for cars to 15%, but also all goods and semiconductor and pharma.
Moving on, the United States and China are set to resume a fresh round of talks for an extension of the trade war truce between the two nations. Treasury Secretary Scott Bessent and China's Vice Premier will meet in Sweden's Stockholm to restart negotiations. The current 90-day truce between the US and China is set to end on 12th of August. US Commerce Secretary has said that Washington's August 1st deadline for imposing tariffs will not be extended. Speaking to Fox News Sunday, he said that the US president is willing to continue negotiations even after the tariffs kick in. However, he maintained that no country will be given a grace period. And speaking of trade deals, the United States has managed to secure agreements with most of its biggest trading partners. China, Japan and the European Union are Washington's top trading partners and have achieved trade deals in the tariff range of 10 to 30%. Similarly, 3 countries of the South Asia region, Vietnam, Indonesia and the Philippines, have also reached trade pacts with the US. However, other countries of South Asia, including India, have not been able to finalize a trade deal and are facing a proposed tariff rate in the range of 25 to 36% ahead of the August 1st deadline. And speaking of striking a trade deal with India, sources have said that with only 4 days to go before the August 1st deadline, there have been no signs of a breakthrough on trade deal yet. Parikshit Luthra joins us now. Parikshit, with no breakthrough in sight, what does this mean for both the countries?
Well, it looks like it's going to be difficult to have any sort of interim deal before the 1st of August deadline. Sources telling us there is really no breakthrough in talks since the 18th of July. That's when the 5th round of talks between India and US ended in Washington, D.C. Since then, we've not really reached a point where we could say that both sides can have an interim deal with the issues that have been agreed upon till now. What seems to be the case is that Donald Trump and the United States want a bigger, more ambitious deal. We have seen the kind of deals he has struck with Vietnam, Indonesia, also the European Union and Japan. Many of these deals are one-sided, with the US getting unprecedented zero-duty access in these markets, but in turn it is imposing 15 to 20% tariffs. That's not acceptable to India. India wants the tariff arrangement to be equal and reciprocal. Secondly, US has also got major big-ticket investment commitments from companies like Japan and Indonesia. With Japan, almost $550 billion worth of investment commitments. Now, many experts would say these are not binding, but at least on paper, those announcements are definitely there. Can India give in to such commitments? At this stage, it seems we're not ready to make such big-ticket announcements for the US. There are definitely energy purchases, defense purchases in the pipeline, but not to the extent of what is being committed to or what he's claiming to be commitments from Japan, Vietnam and Indonesia as well. So let's see what happens. While both sides are not ruling out any interim understanding, any deal looks difficult as of now, but post the 1st of August, discussions on the larger bilateral trade agreement by fall would continue. In fact, a US negotiating team is coming here in the month of August to see if there can be some sort of breakthrough in talks.
All right, thank you, Parikshit, for that. On that note, we will slip into a short break. Coming up next, Defence Minister Rajnath Singh says no important military asset was damaged during Operation Sindoor as Parliament kicks off a debate. Welcome back. On to the day's market action now. The market fell for the third straight session, ending nearly at a 2-month low. IT and bank stocks led the decline. Large cap IT stocks witnessed a broad-based fall after TCS's job cut announcement. Kotak Mahindra Bank erased its market cap of over 30,000 crore rupees after reporting weak earnings. The Finance Ministry has said that India's inflation in FY26 could be lower than the Reserve Bank's projection of 3.7%. In its economic report for June, the ministry said that this creates room for the easing cycle to be sustained. However, the report flagged that the slowdown in the United States could dampen further demand for Indian exports. The government has plans to roll out central KYC framework by March 2026. This is slightly later than the original deadline of 2025. The new KYC rules will introduce a risk-based and confidence scored system. Sapna Das joins us now with more. Sapna, take us through the new rules.
Well, this has been in the pipeline very clearly. So instead of the current calendar year of 2025, we are given to understand that probably we have March 2026. The central KYC registry should be ready to roll out this revamped KYC process, or rather the framework, so to speak. Now, if you recall, the finance minister in her budget speech had also alluded to the same. She had said that in the current year, this is going to roll out. Plus, it's also going to help in periodic updation of KYC records. So having said that, 3-4 important elements that will be brought out from March 2026 in support of customers and regulated entities, which we should be aware about. First, of course, the confidence score. This is the first that's going to happen in terms of your KYC data. So, it will be kind of categorized on 4 counts: basic, complied, enhanced, and assured. So the higher your confidence score, the better it is for you as well as for the regulated entities. How will this help in the times to come? Well, every time when there is a re-verification of KYC documents, if you're in the highest confidence scoring category, it may just be possible that your re-verification will be relaxed by the concerned regulated entities. That's one aspect. The second, of course, is also in terms of, risk, basically the re-verification process. Again, what I was talking about, the updation of records, that's going to be far more streamlined. We are given to understand, for instance, if, as of today, every 10 years, your KYC documents are kind of re-verified. But today, for instance, if you have a PAN which is updated, so starting from that particular date, your next re-verification will happen. So, to that extent, it's going to be very beneficial for the customers. Also, all your data is going to be there in a streamlined fashion on the registry. So, any regulated entity that wants to check on your records, instead of asking you, can actually access that database directly. That's second. Third, of course, we also given to understand, last but important, we are also given to understand that there will be also risk-based KYC in the sense that low, medium, and high risk. Now, this is being done to basically, check and prevent money laundering.
All right.
On that count also, there are certain criteria that are going to be introduced.
All right. Thank you, Sapna, for that comprehensive update. Shifting focus now, the monsoon session of Parliament session resumed today with Defence Minister Rajnath Singh leading a debate on India's Operation Sindoor against Pakistan. The Defence Minister rejected allegations that the operation was halted due to external pressure. He clarified that it was only paused after India achieved its political and military objectives. When questioned on the number of Indian jets lost during the operation, Rajnath Singh slammed the opposition and said that the result is what matters. He reiterated that Operation Sindoor was a clear military success.
कभी-कभी हमारे प्रतिपक्ष के लोग ये पूछते रहे हैं कि हमारे कितने विमान गिरे। मुझे लगता है उनका यह प्रश्न हमारी राष्ट्रीय जनभावनाओं का सही से प्रतिनिधित्व नहीं कर रहा है, मुझे लगता है। उन्होंने एक बार भी हमसे यह नहीं पूछा कि हमारी सेनाओं ने दुश्मन के कितने विमान मार गिराए। आपको प्रश्न पूछना है तो यह प्रश्न पूछिए, क्या ऑपरेशन सिंदूर सफल रहा? तो उसका उत्तर है हाँ।
देश ये भी जानना चाहता है, वे 26 लोग जिनके परिवारों में आज कोई गुजर गया, वे ये भी जानना चाहता है कि 100 दिन गुजर गए और वे 5 दहशतगर्दियों को ये सरकार पकड़ नहीं पाई।
At least 3 terrorists have been killed in an ongoing encounter in Srinagar's Dara district. The operation has been codenamed Operation Mahadev. A joint team of police, army and the CRPF launched search operations in Lidwas this morning. Officials said that there were reports of terrorist movement in the area. The army has clarified that the operation is still ongoing. The union government has said that Elon Musk-backed Starlink will offer services at around 3,000 rupees a month in India. Chandrasekhar Pemasani, the Minister of State for Telecom, told CNBC TV18 that Starlink's India entry will not be a risk to existing telecom players. The company's capacity is also to provide only around 20 lakh connections in India. The Maharashtra government has culled more than 26 lakh beneficiaries from the monthly stipend scheme for women. This after 17 lakh beneficiaries were removed in April. Santya Gora is here with more. Santya.
Right. So in a significant development, Maharashtra's BJP-led Mahayuti government has slashed 26 lakh 34,000 beneficiaries from its flagship Mukhyamantri LadkiBahin Yojana. The state government claims that these beneficiaries were ineligible for the scheme. Now, why were they ineligible? According to state government, they were either availing benefits under multiple schemes or multiple members of a single family were getting the cash handout. In fact, in some cases, even men had enrolled and they were receiving money under the scheme. The important part is that these 26.3 lakh ineligible beneficiaries were slashed from the beneficiaries list after having received 1,500 rupees every month for all these months. Women and Child Development Minister Aditi Tatkare said that regarding action against those who fraudulently enrolled in the scheme, the state government will take a suitable decision. So whether or not an action will be taken, that remains to be seen. Also, this is not the first time that ineligible beneficiaries have been found availing benefits under the scheme. In April 2025, benefits for 8 lakh beneficiaries were reduced to 500 rupees per month, citing that they were already receiving stipends of up to 1,000 rupees per month from other schemes. That same month, 17 lakh beneficiaries were removed from the list. In June 2025, 2,200 government employees were found availing benefits and were subsequently removed from the list. In July, 14,000 men were found receiving benefits under the scheme, a scheme which is purely meant for women. And now, 26.34 lakh ineligible beneficiaries have been removed. The scheme was launched in July 2024, just months before the Maharashtra Assembly elections. Before the elections, the total number of beneficiaries under the scheme was 2 crore 63 lakh. Since then, 43 lakh beneficiaries, including these 26.34 lakh, have been removed, but only after they had received 1,500 rupees per month for several months. This has attracted criticism from the opposition, which is calling this a criminal waste of taxpayers' money. The opposition claims the government allowed these ineligible beneficiaries to avail benefits for electoral gains.
All right, thank you, Santya, for that. Shifting focus now, 19-year-old Divya Deshmukh has won the 2025 FIDE Women's World Cup in Georgia. Deshmukh beat veteran Grandmaster Kuneru Hampi in the second rapid tiebreak with the black pieces. With this, the teenager has etched her name in history as India's 88th Grandmaster and only the 4th Indian woman to achieve the prestigious title. All right, with that, it's a wrap on this edition of Business 360. News and updates continue right here on CNBC TV18.